what we need to do is that cash inflows and cash outflows are very important in every spheres. Okay, so whether we are doing our own business or for the organizations or whether it is for your own salary, cash management is very important. The primary objectives of cash budget is to forecast, to keep a cash balance, to identify your potential receipts and also deficits and also surpluses. We all know that mastering the cash budgets is a very important topic, and it would be very beneficial for you when you are forecasting. So today we welcome Professor Anup JS, who is with us today to give a very wonderful insight on this topic. So I welcome Professor Anup JS, and Professor Anup had been a very professional in this field. He has vast experience in finance, and also he has been doing research, and his topic of interest has been in finance management. His associations with very renowned organizations and also in the reputed academicians. And today we are fortunate to have him here in the panel today, who will be taking us through the wonderful journey. And here I welcome Professor Anup JS. I hand it over to you, Professor, so that you would be going with the presentation.
Oh, thank you very much, Sanchita Thapa. Was said everything about me and a little bit about the topic as well. Thank you very much for that. So I appreciate your effort. I always appreciate your effort. Okay, okay, guys. Very good afternoon or good morning, good evening, whatever I want to say. Everything is there. So hope you all will have a good day today. So this is all about cash. Which is an interested factor for us in many terms, actually, right? So in all the life, we are actually in search of cash and in search of the wealth and all. So this is a basic point which will, or basic term or basic subject which will provoke you to think about how you would manage your cash. But we are discussing this matter actually on the perception of a business. But when the time permits or the situation permits, I like you to connect to your personal life as well. Okay. Okay, let us start with the topic, the cash budget. The cash, as you all know, which is very important in our life, and obviously that is a basic part of the wealth as well, right? So let us get into the topic right now. Okay, please hold on 1 second. Yeah, the introduction actually, Madam Sanchita Thapa has already given to you, as we all discussed. Cash is very important for us, and that has to be managed properly. And as far as a business is concerned, the budget is prepared for every, functional areas of a business. So, for example, there are different types of budgets. You need to have sales budget, production budget. You need to have the expense budget. So, why you are preparing budget? But what do you mean by budget? Budget is a plan, the financial plan for coming, or the future. What do you call it? Is a future, right? So it can be prepared for a very short period of time, say, for example, for months, 1 or 2 months, and then for a year, for more than 1 year. You can prepare budget for, short period of time as well as long period of time, right? So here, we are focusing on the cash budget alone, and a number of functional budgets are there as far as a business is concerned. Uh, Budget is a financial forecast or financial plan for coming days or coming months or coming years, right? So before discussing the cash budget, we have to discuss some basic terms as far as the cash is concerned for a business, for personal life as well. See, as far as a business is concerned, you are running a business for generating revenue, which is from the operation, right? So which is also known as sales. When you talk about sales or revenue from operations, which fetches you, profit or income, right? So you have to look on very carefully on your revenue from operations, because there are two sides of revenue, two parts of revenue from operation actually. One is from the cash receipt, and one is from the receivables. Okay, there are two parts of revenue from operations, or the sales, or you can divide the sales into two parts: the cash sales or the cash revenue from operations, and uh, the credits revenue from operations. What do you mean by cash revenue from operations? When you do a business, you sell a product, you will be getting money at the time of selling it, right? So which is known as the cash sales or the cash revenue from operations. And the second thing is the receivables. What do you mean by the receivables? Some of the customers from your business may ask for more time to pay off their dues. So you will be given them certain time to pay off their dues, right? So they are actually known as trade debtors in terms of business, which is technically known as receivables, right? So revenue from operations can be divided into two parts: cash revenue from operations and credit revenue from operations. Credit revenue from operations, part of your customers will be paying you after a particular period of time. They're called trade debtors, and technically they are receivables. Okay, so hope you understood what is revenue from operations and what is receivables. Similarly, we have payables. Cash, all the transactions may not be in cash terms. That is what we discussed in the case of credit revenue from operations. Similarly, when you are running a business, and you are getting credit facility from your supplier, you will ask for time to pay off your dues, right? So they are actually known as trade creditors under the category payables, right? So payables are the amounts which you didn't pay now, but it will be paid in near future. Okay, so these are the basic terms you should keep in your mind when you are going for cash dealings actually. Certain payments and receipts are delayed. Okay, so you will not get certain receipts at the time of it is happening, and similarly certain payments you will not make at the time of it is happening. These are the three important things you have to keep in your mind. As Sanchita Thapa rightly said, so we are going to discuss the total cash inflows and outflows, how this will help a business to manage actually certain things, right? So hope you understood what is the meaning of budget. Budget is a financial plan, and that will definitely help a business firm to utilize its resources so carefully. And the second thing is the cash budget. Cash budget actually deals with cash inflows and outflows. So we have a number of other budgets as we discussed, the functional budgets as well. Okay, as we discussed, sales budget, other expense budget, production budget, purchase budget, a number of other budgets are always there. Okay, but we are concentrating on the cash budget. Merely the cash receipts and payments are going to be discussed. Okay, cash inflows and outflows. Okay, right. So why you need a cash budget? That is what we are going to discuss and in depth. Okay. So it ensures liquidity. What do you mean by liquidity? So let me connect to this liquidity term to your personal life. Suppose you need to pay your telephone bills in the next month. Let's say it is $2,000 or $1,000. Uh, you are having only $500 in your hand, okay, in your bank as well. So it may not be actually enough to meet your telephone bill, or whatever the bill you have, or the internet bill, whatever it is, or the fuel charge which you need to have in your vehicle every month or every day. So you don't have enough fund, which means that you don't have liquidity. Hope you understood what is the term liquidity is meant is or liquidity meant for, right? Liquidity means you should have enough fund to clear off your payments. So how cash budget actually ensures the liquidity? Suppose you are having a plan of next 1 year or 6 months or 3 months. You will not be facing a struggle or a difficulty to pay off your bills at the time it comes in, right? So this is very clear. Liquidity means you will be having enough fund to pay off your you know monthly expenses. Let's say your weekly expenses, your you know yearly expenses as well. So you hopefully you understood what is the meaning of liquidity. So if you have a proper cash plan, cash budget in your hand, as and when the cash payment comes in, you will have that much sufficient amount in your bank account or in your hand, right? So the next main advantage as far as the cash budget is concerned, cash budget means the cash plan for a particular period of time, a particular future period of time. Actually, let it be for 3 months. So here we will take an example of next 3 months. You are having a proper cash payment and receipt plan, right? So this is the next thing is the maintenance of working capital. What do you mean working capital? Which is very, very important term as far as a business is concerned. The working capital is the difference between total, short-term payments, total short-term receipts minus total short-term payments. So, for example, what do you mean by total short-term receipts? Total short-term receipts include your short-term assets. Short-term assets are known as current assets. What do you mean by current assets? Any assets which you hold and that can be converted into cash within one accounting period or one financial year, then it will be grouped under the category of current asset. Okay, so the short-term assets. In current assets, we have certain assets like cash and inventory, and then the receivables. These three are the major portions of actually the current assets: cash, then inventory, and the receivables. As we already discussed, cash is an important factor. How receivables comes in as far as a business is concerned, and what is inventory, which you already knew, right? So inventory means the remaining stock which you are having in your business firm to be sold off to get the cash. Okay, so these are the three components of the short-term assets, and the short-term liabilities or other short-term payments include the payables and sometimes bank overdraft, etc. The short-term loans, etc. So when you take the difference, you'll be getting the amount of working capital. Among the current assets, cash is very, very important, right? So how much cash you will be having is actually very, very important as far as your current assets are concerned. Okay, so when you have more cash balance, obviously your working capital, which means the difference between current assets and current liabilities, will be increased, right? So the cash is actually helping you to maintain sufficient amount of working capital. So what is working capital? The actual meaning of working capital is you need to have certain amount in your business, or certain money, or near money assets in your business to pay off your you know short-term commitments, actually, right? So the day-to-day capital required for your business is actually termed as working capital, which can be computed uh, by deducting current liabilities, or the short-term commitments, payment commitments from your short-term receipts, right? Short-term assets. Okay. So cash budget will give you a great idea about how cash is in your hand, or how much cash will be in your hand after a particular period of time, which is the most important element as far as current asset is concerned. So hope you understand the second point, uh, the need or the advantage of a cash budget. You will be identifying certain amount of cash balance by preparing cash budget. Cash is very important element in the current asset factor. Current asset actually contributes working capital, right? Now the next thing is, but best utilization of fund. See, so you will be having, if you don't have a plan, you will spend a lot of money, right? See, suppose you are giving yourself a budget of $2,000 for 3 months for your entertainment. Okay, right. So you decide that you will be spending only $2,000 for your entertainment for 3 months, and then after 3 months you found that you spend 2,500 or $3,000 for your entertainment. Then you will go back to your entertainment factors for previous 3 months, and you will try to identify where I spend more, right? So next 3 months or 6 months, when you prepare the cash budget, you think that this is not good. That particular type of entertainment actually, got my cash balance more, or got away my cash balance more. So you will have certain, you know, being a human being, actually, you will try to think that this is not that good. So that entertainment expense, I have to reduce. So the next time when you deal with that type of entertainment, you will withdraw by yourself, right? So the utilization of fund, you have to have a careful view when you have a cash budget in your hand or in your mind, right? Now the capital investment, obviously, suppose you want to buy a new fixed asset in the sense, a vehicle, or a laptop, uh, or a phone, new phone. So you need sufficient amount of money, right? Now, obviously, you can go for the loan factors as well. The EMI factors are available everywhere nowadays. But you can, if you think that you will be buying a new asset for yourself, especially when you connect to this to a business needs a lot of long-term assets like machines, vehicles, then what do you call the infrastructure? The business needs a lot of money for that. Even if you are going for, you know, the loan factor, you need to have the initial payment, right? So the best cash budget or the best cash management actually gives you freedom to think about new investment in the long-term assets. So for example, in your personal life, you suppose you are going to buy a new vehicle after 3 or 4 months, you need to have an initial payment in your hand, right? So it should be there in your credit card or debit card, whatever it is. There should be some sort of amount to be left to buy this. Okay. So what do you think? So when I deduct certain expenses, I'll be having that much amount. So if you think that you can deduct certain expenses, and you should have a plan, at least in your mind, right? So that will definitely work you, or benefit you to save some money and buy the asset. Okay. So capital investment is very, very important as far as a business is concerned. They have to have certain amount of cash balance at the time of buying the capital asset. So they have to have a cash budget. After 3 months, they are buying a new machine, which means that certain amount to be left in their hand, and that should be utilized for buying the asset. So that time, that much amount of cash must be there in your hand. So that you will be able to design your cash receipts and payments, right? So you have to save certain money. Cash budget will definitely help you for that, right? Now preparing borrowing schedule, as I said, suppose you're deciding to buy a new vehicle for you after 3 months, and you need to have $10,000 in your hand, right? But unfortunately, you found that after 3 months, you're having only $2,000 in your hand, in your bank hand, in the sense in your bank account, in your credit card availability, in your liquid cash thing, every uh, facility. When you analyze it, you found that you are having only $2,000 instead of 10,000. So what do you do? Either you will be using 8,000 from your credit card, that is your borrowing thing, and for at least for 1.5 months. And uh, next thing, you can go for personal loan from your financial institution, right? So you will be able to deal with the transaction, actually buying the vehicle. So this borrowing schedule, because you found that you are having only 2,000 after 3 months, and the same after 3 months you have to buy a new vehicle or a new asset in your business, new asset in your personal life. You will be arranging some additional personal finance or personal finance assistance from any financial institution, or any friends, relatives, etc. Right. So cash budget. If you are having a cash budget, your borrowing schedule can be identified, because you are knowing how much cash balance you will be having after a particular period of time. Clear. Similarly, then the preparing repayment schedule. Suppose you have taken a loan after 3 months, then after that, you have to make a repayment schedule. That can also be accommodated in the cash budget. Okay. Then dividend, which is very, very business term. Dividend, hope you understand what is the meaning of dividend. Dividend is the part of profit which is distributed by a company to its owners or shareholders, right? So if a company is having a sufficient cash amount to distribute the dividend in cash, the company will do it. In other case, the company won't do it, right? If the company does not have any cash in its bank or in hand, then the company will not be paying its dividend. Dividend, once again, I tell you, is a part of profit. You are investing your surplus money in a company share. Company will be offering its part of profit to you, because you are the owners of the business, right? So the company can decide how much amount of dividend to be paid, when only after, not when only after it looks at its cash balance. So the company can decide how much amount of dividend to be distributed among the shareholders after 1 year, or after 6 months, or periodically. Okay, how much amount to be spent, or cash to be spent in terms of dividend. Okay, so this is all about the need and advantage of preparing cash budget. Okay. Okay, now we will be discussing how are we going to discuss uh, the steps to create cash budget. See, the only 4 steps that you have to prepare a personal, a professional, a business budget, right? So very simple thing to understand. It is all about cash inflows and outflows, and which has to be identified certain time ago. That is the only the difficult part as far as you are concerned. But a company or a professional, service provider can easily identify it. But as far as person is concerned, it may be difficult because unexpected events are more in personal life, right? Perfect. Estimate cash inflows of the business during the period. Suppose you are deciding that 3 months or 6 months budget to be prepared. So, being a family member or a what do you call it? If you are running a family, so you will think that how much amount of money to be required for every month. You understand this, right? You know it, right? There are a number of bills and number of other payments and number of personal payments and number of what do you call abnormal payments or entertainment payments in a month. There are lot of payments and there are limited amount of receipts. Mind you, good things are always less in our life. So the receipts are always less, but the payments are always high. Okay, so how you will manage it? So decide what is the receipt first. Okay, how much amount of money or cash you can receive in a month in the forms of salary, rent, or any insurance amount, or any other returns which you do online, offline, whatever. Right. So the receipts that you have to have a definite plan in your life. Okay. As far as a business concerned, it is very certain what are the receipts they have. Unfortunately, in personal life, if you are having different sources of income, some incomes are not received every month, and some incomes are not received. Some incomes are incomes are received sometimes every 7 days or 10 days, like that it goes, right? So convert it into months. The amount which you receive is converted into months. This is for personal budget, I am telling you. But in a business, there is actually definite income comes in the form of revenue from operations, the sales factor. Okay, it can be from the cash sales, it can be from the receivables or trade debtors. Okay, so there would be certain amount of receipts or definite amount of receipts as far as a business is concerned. But as far as a person is concerned, what you have to do is today at least try to identify what are the incomes or receipts you will have every month. Okay, then prepare a cash budget for 3 months. Okay, after this session, you may be thinking about it, hopefully. Right. The next thing is, once you decided what are the receipts you are getting every month or every 3 months or every 1 year, then what you have to do is this period is according to your convenience. Actually, you can go for monthly budget. That is a very good thing as far as a business is concerned and as far as an individual is concerned. Right. So let me talk about the monthly thing. Right. Estimate cash outflows of the business during the period. The next thing is, once you have identified, next what you need to do is go to identify what are the outflows. As I told you earlier, unfortunately, an average man or a normal man will have in personal life. I'm connecting this. Okay, we'll be having more payments. or receipts are limited actually. So from this point of view, you cannot sometimes increase your receipts, but you may have space to reduce your payments, right? The basic rule of finance is to uh, delay your payments as far as possible and receive your incomes as immediately as possible. So keep this fact in your mind. There are certain economic factors involved in this: the time value of money, the interest factor, and a number of which is known as the opportunity cost. We don't look at all those stuffs. Okay, we will be discussing now how to prepare a cash budget. Inflows are identified. Now the outflows to be identified. It is difficult to identify the outflows, as I told you earlier. See, outflows are sometimes accidental. But the thing is, when you do a budget, it's a plan for future. You can have certain amount of money to be kept in for abnormal things as well, because we cannot predict our life. Sometimes we will be forced to spend more due to some unforeseen incidents, right? So keep certain when you prepare a cash budget for personal purpose, please keep a portion of your income for some unforeseen incidents, right? Some unforeseen incidents, I don't tell you a negative thing. Sometimes it will be positive thing. You will be meeting your old friend and you'll be having drinks with your old friend. You'll be paying the bill. Okay, this has to be kept in your mind every month. Okay, this is about the personal cash management thing, right? So let us go back to the business thing. The business, obviously, in business also the future is unknown, so they have to keep certain amount as reserves as well. But unfortunately, that is one of the basic disadvantage of cash budget is that we don't allocate anything in cash budget for the reserves, the unforeseen incidents. That is one of the basic disadvantage actually for of this cash budget, because we cannot predict things. The as and when it happens, we predict it and we accommodate it in the cash budget. The real thing only we are trying to accommodate in cash budget. Okay. No unforeseen incidents will be accommodated. Abnormal incident will not be accommodated in cash budget. Okay, perfect. The first step is to identify the inflows, and the second step is to identify the outflows. As simple as that. Okay. I was actually trying to tell you that what are the complications to identify the inflows and outflows in a personal life, but in a professional or a business life, it is quite definite actually. Somewhat it is definite. Okay, right. And next thing is determine the surplus or deficit of cash. See, what is the surplus or deficit of cash? So when you have more inflows, when you compare to the outflows, then it is said to be your surplus. Similarly, when you have more outflows, when it is compared to the inflows, it is said to be the deficit. So obviously, people like to have more surplus, and the deficit amount should be avoided in our life. In terms of anything, the deficit won't be accommodated or won't be accepted, right? Especially in terms of money. So better you have a surplus cash budget all the time in your life. Okay, as far as the business is concerned, so let me connect to the business. The business is concerned, business like to have surplus cash budget. Surplus simply means your inflows are greater than your outflows. Okay, deficit is a negative thing. If you have deficit, you have to have some more effort to be put into to reach the surplus. The borrowing schedule to be prepared, and you have to borrow money from outside. Okay, if you have deficit to meet your clients and you meet your creditors and all, or the stakeholders who are who has to be given money from your business, right? And then the managing deficit is the very important thing. That is what we were discussing. You may have to you will be forced to go for borrow money from other people to manage your deficit. Okay, right. So this is all about only 4 steps: inflows to be identified, outflows to be identified. Take the difference. If you have a positive figure, it is surplus. If you have a negative figure, it is a deficit. And if it is a negative figure, it is dangerous. So you have to raise additional money from outside to manage your payments. Okay, right. So this is the format as far as a cash budget is concerned. This is all about the cash budget of a business firm. Opening balance. What is opening? Here it is 3 months. What do you call? The cash budget is prepared. The format is for only 3 months: April, May, and June. Okay, you can prepare it for 1 month. You can prepare it for 2 months. You can prepare it for 6 months and 1 year and more than 1 year as well. Doesn't matter. So it is according to you. If you do a personal budget, it is your discretion to decide how many months it should be there. Okay. The first thing is the opening cash balance actually. So when you start in the month of April, you will definitely be having certain amount of cash in your hand or at your bank, right? That is called opening balance. And add receipts, right? Receipts, we have already discussed the cash RFO. Every month you will be getting money from your sales. As far as a businessman is concerned, the businessman or the business receives money from the sales. Okay, that is actually cash revenue from operations. Okay, then the trade debtors. So we already discussed the receivables. Okay, so we'll be giving time to your customers. You pay next month, or you pay the dues in after 2 months. Okay, like that you give time to your customers. They will be paying. So sometimes in February, suppose you are doing a business, a small business, let it be a textile shop or a bookshop, whatever it is. Your friend came into your business and took some books and tells that I'll be paying this after 2 months. So being a friend, you may have to, you will be forced to allow him to do that, right? Or her to do that, right? So this is so very important. So you had a sales in February, and that will be received only in April, right? So you cannot show that amount of cash receipt in February. You have to show that amount only in April, right? Hope you understood what I said. Right. That is all about debtors or the collection from the receivables. And sometimes you may have to, take loans. You will be selling some of your assets. So, say for example, when you discuss your personal life, you will be, selling your old-fashioned car, vehicle to somebody else, and you'll be going for a new one, and you'll be selling off your mobile phone. So any other assets which you have, that time you will be receiving certain money that should be accommodated in the cash budget as receipts. Right. So these all about the receipts. As we discussed, that now then you'll be taking the total of receipts, right? And Next thing is you have to take the total of your payments. It's as simple as that. It's very simple thing to understand actually. Now the payments. What are the payments as far as a business is concerned? That's what we are discussing now. See the cash purchase. Suppose you are running the bookshop again. Bookshop, you will be buying bookshop from the authors and you will be selling it from your outlet, right? Mm, So you have to buy it, right? First, and then you will be selling it. Suppose you are producing some product, okay, and you have to buy the raw materials from the other parties. You sometimes you'll be producing it, the raw material itself you are producing it, but you need to buy something to produce it, right? So there is purchase always there, or the production cost is always there. So you will be purchasing certain raw materials from outside or certain goods from outside, that is there as cash purchase when you pay the money at the time of purchase. And similarly, as we discussed, there are creditors, payables. Your suppliers will be offering you some credit facility. Uh, Now you are buying today. You are buying your raw material and or product, and you try to sell it. You try to pay it after pay the amount after 2 months or 1 month or after 10 days, whatever it is. This is your payment to creditors. It is like debtors collection from debtors. Actually, sometimes creditors will be allowing you 1 month or 2 months or 3 months. Uh, you know, uh, time for payment. So when it is 3 months, the January amount will be paid in April, right? And the February amount will be paid in May. This is the point you have to keep in your mind. Okay, the previous amount will be there in the month where you prepare the cash budget, right? Okay, next is, obviously, as we discussed just earlier, there would be a number of payments. When you compare to receipts, payments are more, right? So wages, salaries, expenses, other payments, a number of payments. Suppose you are running a business, you are a personal life, your receipts are limited, your payments are high, or the number, at least I'm not telling the amount, the number of payments will be high as far as the business is concerned, especially. And in personal life also, I have experienced many personal things in my life as well. There are a number of payments, foreseeable expenses are there, unforeseen expenses are also there, right? So this is the fact. You have to take the total of cash receipts with the opening balance for the first month and take the payments. Take the opening balance and add the receipts with the opening balance. You will be getting the receipts total and take the payments total. Then take the difference. You will be getting this closing balance, and balance carry down can be either positive or negative. If it is a positive thing, mind you, it is surplus. If it is a negative thing, this will be a deficit. Okay. That means you are lacking that much amount of money in April. So you have to depend on some sort of loans, borrowings from outside, etc. Right, to manage the cash. Right. So this opening balance of closing balance of April will be the opening balance of May. That's a clear thing. There won't be any sort of doubt on this. So you will be ending, let's say, $1,000 with April. You are having a cash balance of $1,000 that will be utilized in the month of May, right? So in May you'll be utilizing this $1,000. The opening balance of May will be the closing balance of April. Is that fine? Then again in May you'll be having the receipts, again the payments. Sometimes the same payments, sometimes different payments may be coming in May, and this will be happening in June as well. Okay, so May's closing balance will be utilized in June as an opening balance, right? Again, in June also, you'll be having receipts and payments, right? So hopefully you understood this format. Now, what we are going to do is just an example. Okay, right. Here we have a company's details. It's 21 February details have been given. Okay, 21. Is it visible? Can the moderator just comes in and tell me that the figures are visible?
Yes, sir. The figures are visible.
Perfect. Okay, thank you very much, Sanchita. Okay. See, in February 2021, the company or the business firm is having, you can see it as 60, can be $60,000, 6 million, whatever it is. Okay, this is merely for an example, right? Okay, and the cash sales in March, it is 90, in April 85, May 70, June 65, and the credit sales, which means that the customers will be getting the credit facility from the business in February, $90 or $90,000, and then March, $105,000, like that it goes, right? And then cash purchase, which is a payment. So mind you, these cash sales and credit sales are receipts. Cash sales will be received at the same month which it happens because it is cash sales, right? In credit sales, mind you, it will be delayed. You will not be getting credit sales amount 90 in February itself. It is based on the credit terms. Sometimes the business firms allow the customers to pay within 1 month or 2 months or 3 months, whatever it is. If it is 1 month, the credit sales 90. If it is 1 month, the credit sales amount will be received in credit sales of February. 90 will be received in March. So in March, that the receipts will be shown, right, as receivables, collection from receivables or debtors. Suppose it is 2 months, the 90 will be received in April. This is the point you have to keep in your mind. Okay, now cash purchase. In the same month of purchase, it happens. So you will be paying it. The February amount, $45,000 will be paid in the same month. In March, $70,000 will be paid in the same month. Okay. And in credit purchase, the suppliers will allow you to allow some time to make the payment. Let's say suppliers will give you 2 months time to pay off your dues. In February, credit purchase amount 80 will be paid in April. Okay. Right. So similarly, the other expenses, a number of other expenses are there in the form of wages, salary, other payments like legal charges, bills, etc. Okay, right. This is the scenario. This what we need to do. We need to prepare a budget for 3 months ending June. Ending June means you have to prepare from April to June, April, May, and June. Right. So the scenario is understood, hopefully. Now we'll be getting into the next slide. Okay. So the credit terms. Let us get into the credit terms. Okay. Customers are allowed 1 month's time for making their payments. So customers are your receivables. So here it is the credit sales. See. So when is the February amount will be received? It is in March. So 90 will be received in March and 105 will be received in April, 160 will be received in May, and 110 will be received in June. As simple as that. Okay. So this is all about, the credit terms as far as the customers or the receivables are concerned. And the next thing is creditors allow 2 months time for payment. What does it mean? You are purchasing your products on credit from your suppliers. They will allow you 2 months. Let us go back to you know this the credit purchase factor. 2 months means you have to prepare budget for April, from April to June. So in April, your payment on credit purchase to your suppliers will be 90. Is it 90? No. 90 will be paid in June. 80 will be paid in April. So in a no. So this, sorry. Creditors allow 2 months for payment, right? So here it is. 2 months. You are preparing from April, which means that February amount 80 will be paid in April, and 100 will be paid in May, and 90 will be paid in June. Like that it goes. Hope you understood this. Okay. So what is the next thing? The half month is a time taken for making payment for other expenses. See, other expenses. Let us take the amount of other expenses. See this, other expenses. It's half amount for every month, right? So in April, what is happening actually? Half of the amount, which means that previous month's half and the current month half. Okay, so previous month half means 26 half and current month half. So which is 26 half is 13,000 and 24,000 half is 12,000 or 12, right? Similarly, that will be paid in April. Similarly, in May, 30,000 plus 24,000 divided by 2 in May, so half of previous month and half of this month, every month. This is the payment schedule. Okay, so if you understood this, okay, right. So every month, $3,000 is to be paid for rent. Okay, and so which means that this is another payment on cards, and then $4 is to be paid as dividend in June. We already discussed what is the meaning of dividend. So that is to be paid only in June. It means that you don't need to pay it in April and May, right? So cash bank balance is expected 1st April 2000. It is not 2016. It is the date as yeah, it's fine. This 3 months on this year. It is the current year. It is actually how much is the amount? Which is $4. Okay. So now this is April, May, and June is happening here. Okay, opening balance. So you don't look at May and June now. You have to look on April. Okay. So the opening balance of cash, which is given like $4,000, which is the opening balance. Okay, and see this receipts. There are two receipts as we discussed: cash from revenue, cash revenue from operation, and the collection from receivables, the trade debtors, right? See, how do you calculate it? See, cash sales April 85, May 70, and 65 for June, right? Credit sales, since it is 1 month, 105 for April and 160 for May and 110 for June. This is what it happens, right? Okay. See this. 85 for April, 70 for May, and 65 for June. Cash from cash revenue from operations, and collection from debtors 1 month 105. The previous month amount will be coming in this one. This April amount is actually 105 is from the previous month. The March amount is there, and the April amount is there in May, and the May amount is there in June. Okay, then you take the total of your receipts, then the payments, cash purchase 80 and 75 and 70, which is the same month's amount, and the payment to creditors, it is 2 months. So 2 months back amount is to be paid in this month of April, which is 80, and which means February amount is 80, that is shown here. This is the May amount, which is 100. Okay, no, May amount is 100, which is March amount. Actually, the credit sales of March amount is paid in May, and the April amount is paid in June as well. Other expenses, as we discussed, half of previous months, which is 26. This year, which is 24, divided by 2, 25, like that it goes. Okay. Every month, a rent amount is to be paid $3,000, and the dividend will be paid only in June, which is 4. That is to be accommodated. See here, the first month balance is $6 or $6,000, which is carried forward to the next month, and then take the total. You will be getting to $36,000, and you will be deducting this all the payments to 105. You will be getting 31. Then the 31 amount will be showing on the opening balance of June. And the June receipts will be added together along with the opening balance. You'll be getting 206, and then all the payments will be deducted. Then we have 204 payments, $1,500 as a positive figure, which is on all 3 months we are having the surplus. Okay, right? This is all about the format of cash budget. Hopefully you'll be doing this. Is simple thing to understand. Take all your receipts for every month and payments for every month, then find that you are having surplus or deficit in your cash balance. And so cash balance in the sense, cash in your hand, the liquid cash, and the cash at your bank. Okay, so most probably you will be having the cash at bank balances, right? Nowadays, all digital money works. So try to know that what is available in your bank as your bank balance, and if sometimes you have to make some purchase of new assets, new household equipment in your home, then plan accordingly based on your cash budget, right? So there would be initial payments, even though you are depending on the EMIs or the loan facility, okay, or the credit card facility. There would be some sort of amount allocation must be done. Okay, this is all about my presentation today, right?
Thank you, sir, for giving such a wonderful insight on the cash management. And coming for the in the unforeseen years in 2023, I hope this lecture today in the webinar will be all contributing towards the understanding of the cash flows, and participant will have lots and lots of insight into it. So I'll be taking some questions, sir, and we have
Please.
question from sir. You can stop sharing so that we can also,
Okay,
or
plus.
the main okay, you can stop sharing.
Thank you.
All right, so participants will be taking questions one by one. So first we have Clement Zaiko, and he has given wonderful question. So I would go with that first question.
Please.
So he says, if one has an intention of starting a business and has a perfect business plan, but has very little or no income, How is the cash budgeting done without funds available? Plus, he or she has also to meet daily domestic needs. So how can that be done?
Uh, this is a very wonderful question, actually. See, this is the main problem, actually, good entrepreneurs actually are having. See, this is a sincere question, actually, as far as my thought process is concerned. Many people are having a number of ideas, but the problem is they have to manage their, family and manage their personal expenses, and unfortunately they don't have enough money to start their business. See, so we have, if you have a good idea to start a business, and which is a profitable one, don't think about the funding, don't think about the cash available to you. You can have, you know, the angel funding, the venture capital funding, and number of fundings are available in this modern world. So what you need to do is you have to find these kinds of people and present your idea. Okay, so there are a lot of, compromises you have to meet, but the thing is, your idea, if it is worthful, it will be launched, no doubt on that. Don't compromise on your family life, don't compromise on domestic expense. uh, okay, please go ahead with angel funding, venture capital funding. What you need to do is make a good presentation of your business idea. It is as simple as that. Okay. Hopefully, I and answered the question.
That was a wonderful answer, sir. I hope Clement Zaika, you got your answers. And there is another from the same person, participant, and he says, how should this be done to avoid conflict, which you have already mentioned part of it, avoid conflict of interest between the business side and his domestic needs before the business can start paying dividends? The second part, I believe, is quite a challenging, and it's a very individualistic answer, question. So I think it's applicable to almost every startup ventures. So the second part, shall I repeat the question?
Please.
Okay.
I don't clearly understand this.
Okay, so Clement Zaiko again questions, how should this be done to avoid conflict of interest between the business side and its domestic needs before the business can start paying dividends?
No, you don't need to pay any dividend before you start the business. Actually, the dividend has to be paid only after doing your business. How can you climb interest on your deposits or your investment? See, suppose you are investing your money in a bank or some other investment avenue, so they don't give you the return upfront, right? You have to wait for a period of time, then only you will get the return. So okay, then the conflict, actually the domestic conflict and the business conflict, actually that is a personal thing. So if you connect to dividend is a separate thing. You don't need to pay the dividend or the return to the investor upfront. They will be investing for you, and when you get the dividend, you will be when you get the return, you will get enough share of it. Don't worry. And the personal and the professional life conflict, that is purely personal. It seems you have to manage by yourself if it is there. Okay.
Okay, thank you, sir, for that. I'll be taking another question. That's by Toshin Akinditire. Okay, Mr. Toshin, here is your answer, and our sir will be answering the question. The question is, how do you treat a transaction when you have exceeded the budgeted amount and the transaction is very important?
Yeah, I hope I discussed the same thing during the presentation. We have, if it is a personal thing, we have a number of unforeseen expected expenses comes in your life, right? So what you can do is allocate a certain amount for your unforeseen incidents in your life. That time I was discussing, like, suppose you are meeting your old friend after 10 years or 15 years. You are so excited and you will go with him or her with a party for a party, and you are paying for it. You have never expected it, so you need to have some sort of allocation of fund for that. Then only you will be identifying that if it does not happen, so that is a surplus for you, right? So that can be utilized for the next month. You can expect the same thing in the next month. Okay. So this is, you cannot predict our life, right? Nobody can predict our life. What happens tomorrow or what happens in the next moment? We don't understand. So we may be having a medical emergency. Allocate certain amount for that in your main budget. The cash budget is purely dealing with cash. You cannot accommodate those reserves in cash budget. That is the limitation of cash budget. That is what we were discussing that time, right? That is a limitation of
Yes.
cash budget. You cannot allocate any sort of reserves. But in your family budget, you can allocate these things. That is my suggestion. Okay.
That's great,
Next
sir.
question, please.
Thank you. Thank you for answering the questions. Okay, I take another questions. That is by Osman Moro. So, Mr.
Please.
Osman, here is your answer from our panelist. So, the question is, must receivable always come from creditors, or is there any other ways of getting it?
No, receivables are always coming from debtors, not creditors. Receivables are actually the another name of debtors. Actually, debtors are the persons who owe money to the business. Okay, suppose no, debtors are receivables are always generated from credit sales. This is my answer. Okay, there is how would you return the best model of cash budget in micro and macro business? Somebody asking some other question. So I have answered this question, right? Receivables means or debtors means this credit sales amount to be collected after a period of time. As simple as that. Okay.
Okay, so we take a next question, that is with
Please.
reference to the service sector. That
Please.
is by Luke Elire. With reference
Mhm.
to the service sector and an example of a bank, kindly clarify cash revenue from operations and credit revenue from operations. Thank
Okay.
you.
Yeah, there is a little scope of credit revenue from operations unless and until you don't meet your relatives or friends in your service. Okay. Please, that is actually when you provide the service, all in cash terms. 99.9% are around cash terms. There won't be any sort of credit thing as if you provide. Being a doctor, you are treating your patient. He or she will be paying the money on the counter or paying you and then get the consultation, right? It's as simple as that. So it is all about cash. There is nothing on the credit revenue from operations. Unless and until your friends and relatives are there, they will be saying like, I will be paying next month or next after 2 months or something like that. Don't do that, please, because you are treating them being a doctor and you are providing service. Okay, this is mere this is a mere example. Don't take it in a serious sense. Okay, thank you.
Okay, all right, thank you, sir. So here is another question by Knox Mwanze. Is it all right to indicate the loan amount planned to acquire from the bank in the cash budget to manage the deficit?
Yeah, perfect. That's fine. That's a very good question. Actually, he was actually listening it very carefully. Thank you. I appreciate that on that question. Actually, please see. Actually, you are preparing the budget to know that how much shortage of cash you'll be having in your future. So here we discussed 3 months cash budget. If let's say the second month was 31,000, let it be negative 31,000, right? Negative 31,000, right? So what does it mean? So you need to have an arrangement of 31,000 from outside. So you will be forced to borrow money to manage your expenses in that month. Okay. So this is cash budget is all about how to manage your cash and how to make your expenses properly, how to increase your payments, or when to increase your payments, or when to decrease your receipts. Suppose you feel that in the second month it is negative $31,000, you need to borrow it, no other go, right? So it is, that is why it is when we discuss the advantage of cash budget preparation, uh, we discuss you will be having a clear borrowing schedule. If it is a negative thing, you have to borrow from somebody else if you don't have any source. It's as simple as that. This is all about, whether you need to borrow money or you can invest your surplus money or not. Simple as that. So you understood certain things. Thank you.
Okay, thank you, sir. I will take 5 minutes of yours and we'll come back to the questionnaire again. I'll make an aware of UAthena programs to our participants. Dear participants, please hook on to the webinar and we'll be coming back with again the question and answers. I'll take your 5 minutes to present you about UAthena, what we do in UAthena. So this is all about UAthena. So participants, this is about the programs that we do in UAthena. UAthena has a very affordable and flexible, and it's accessible all time according to your wants, according to your time. We offer courses. So let's have go through to our programs in UAthena. So UAthena, we have touched more than 2,25,000 learners in 212 countries with more than 400 courses. We are proud that we have a partnership of more than 10 universities and professional qualification authority. We have partners, you can, at Batre University, Marconi University. We have SQAs, Acacia University from Arizona. We have tie-ups where our partners are from Cambridge International Qualifications and also from CMI and Girne American Universities. We offer many courses. We offer masters, MBA courses, and small microcredit courses. We offer doctorate also. There are many courses which are very flexible and appropriate for you. You can choose among the basic, essential, mastering, diploma, executive diploma, and MBA essential courses. So here you see we have academic courses program for you and also short courses you can learn for free. So let's see. So why you can enroll in UniAthena? It's flexible payment. You can pay as you progress with your course. It's 100% online and it is self-paced. Whenever you have time from your work or from other works, from your business, it's self-paced. You can take some time of yours from your busy professional life and you can devote some time to the learning. So we partner with accredited universities and we have module delivery courses and we have personal tutors allotted to you. Learning with UAthena, it's 100% online and we have a compact package of learning where you'll be accessible to video tutorials, you'll be accessible to reading materials, you'll be going through all the reading materials, you'll be accessible to additional readings, and you'll be accessible to our e-library sections with many reference materials in the e-libraries. So you can log into uniathena.com. I repeat, uniathena.com, and these are our addresses. And you can log into, or you can email to admissions@UniAthena, and you can also shoot a mail to Fatima@UniAthena. So we have our offices in UK, that's in United Kingdom, in Oxford, and we have in Middle East and also in India. So coming back to the question and answer sessions. So we take up some questions. So sir, some question is for you here. Now, Anup sir, we have one question from Edward Quarteng. So okay. Edward Quarteng has a question for you. Is it necessary to finance cash deficit through borrowing, or you can project minimal expenditure?
Yeah, that is what we are discussing. Actually, if you don't have enough fund, if you feel that you don't have enough cash to manage things, what you can do is minimize your expense or increase your receipts by doing some additional work. It's as simple as that.
Okay, thank you, sir. And there is very simple question by Lisley Belenka. She says, what happens to bad debt if not written off?
What happens to bad debt if it is written off?
Yeah, if
it is not if it is not written off, means that you are still having some sort of expectation to get that money back, but you already knew that you don't get it, right? If you don't get it, please avoid it. If you realize that you don't get money, that has to be accommodated in your books of accounts. It is based on a concept of accounting, which is known as concept of conservatism, which means that, suppose, is there any possibility of interacting the participants with me? Let me ask some questions to them.
Yeah, you can always ask, and there will be some replies to the chat.
Okay, a chat, only chatting, right? So we can't interact directly, right? Perfect. That's fine. That's a system of modern day education. Perfect. See, suppose we are going to write an examination, and all are multiple choice questions. You have answered 30 questions properly. Okay. You knew that all those questions are correct, like who's the president of America, who is the president of India, whatever it is. It's simple questions you were being asked, and for 30 questions, you answered them properly. Okay. You could answer it properly, and another 10 questions. There are 50 questions, 30 questions you are quite sure that you answered properly, and the answer is correct as well. Okay, you are damn sure. And next 10 questions, you feel that whether I was right or wrong. You don't know. Okay, you have confusion. You don't get the proper answer from the Google mother as well. Okay, okay. Then so you just guessed it. You don't know how many marks you will be getting for the next 10 questions. The last 10 questions, you felt that all the questions which you answered is completely wrong. You identified from the Google, right? But it's these 10 questions has doubt, and another 30 questions. The first 30 questions you answered, you are damn sure you are correct. How many marks you will be providing for yourself? This is the question for the previous. This is the question which I am asking for the previous question. Yeah, the thing is, I want to tell you, according to certain accounting concepts and conventions, see, you will be providing yourself only 30 marks. Okay. Because even if you are having some sort of chance of getting another 10 questions answered correct, it will be 40. Okay, your score will become 40. But the remaining 10 is certainly wrong. You already identified that. But you can have a chance of giving yourself 40 marks instead giving you for yourself 40 marks. You will be giving only 30 marks as far as an accounting concept is concerned, which is a concept of conservatism, which shows that provide for all possible losses. Okay. So you have to accommodate all possible losses to show your profit, your return, your marks. As simple as I hope I am clear on this. Right.
Yes, you have been clear, sir. And here we end up with our session today. And I thank sir today for giving us such a wonderful insight into the cash budgeting. I hope all the participants are ready for their cash budget and for their planning, and also exquisitely preparing their current asset working capital, and also keeping a best cash management with all.
Can I have a few words to them? No,
Yes,
those who are
yes,
listening.
yes, sir.
Yeah, thank you very much, Sanchita. Actually, this is all about, you can connect anything which is happening in a business to your personal life as well. Okay, please go ahead with a personal cash budget for 1 or 2 months or 3 months. A number of applications are available for preparing your budget from Play Store. If you are using iOS or Android platform, you will be getting a number of platforms, free platforms. Please do use such kind of platforms to manage your receipts and payments. Receipts, you may not be having that much, uh, what do you call, hand of managing it, but you can manage your payments. Please go ahead with that. At least start doing a family budget today itself. Cash budget is an adjacent factor for family budget that shows you the liquidity. Please do start a habit of having budgets in your personal life. This is my humble request. Please do it. Okay, thank you, Sangeeta. Thank you very much.
Thank you, Anup sir. Thank you for our session today. And thank you, participants, and who have waited and who have listened patiently to this 2-hour session today. Thank you. Thank you. And we can leave the session today. Thank you.
Bye. See you.
Bye.